I'm going to give you a quick primer on impact investing and social impact capital, which there's a lot of words out there and a lot of terminology. Give you a sense of what some of it is, just to allow you guys to think about whether that's something that applies to your business model and your business. And then if there's something further on, there's some really interesting people in LA, California, and beyond that do that kind of stuff that can dig into a lot of that sort of stuff. That's me. That's our company. We're here. We're LA based. We are registered impact investment advisors. So functionally, we act like wealth managers. We take assets under management, but only for investors who are particularly interested in impact investments. So we help advise that process. We are not the investor ourselves. We are the advisor to the investor. But within this space, hopefully, I can share a few things. It's a big umbrella with a lot of words that get sort of slapped around haphazardly. So I'm going to try really quick definitionally just to break down what's what for you. So when we talk about the umbrella of social investing, which is perhaps the notion of investing in a traditional sense, but with a screen for perhaps a social or environmental benefit in addition to that, it kind of is, there's two sides of it that oftentimes we break that umbrella term into, SRI and ESG. SRI would be more sort of what's on the right, the notion of sustainable, responsible, and impact investing. That's a more traditional, proactive investing approach. I'm going to take some money, try and invest it, try and do some good in the world. On the other side, some of these sort of ESG, environmental, social, and governance criteria is really more around ownership and being an activist owner. I may exercise shareholder activism. I may own stock in a company. I don't like what they're doing. I'm going to try as a shareholder to flex my muscle around that. Or I may screen out of my investment portfolio certain types of companies, tobacco, guns, whatever, that I don't like. I'm not going to support that as I sort of vote with my dollars. All of that sits under the umbrella of social investing. There's different sides, and people throw around those words, but that's generally how they break down. My world is on the right side of the umbrella, which is more around the notion of proactive investing, which is probably more relevant for startup companies that are intentionally trying to, with a product or service, improve the world in some sort of way, solve some sort of problem, and are seeking fundraising. That's where some of that investment can come from. So there's all those words, but there actually are a set of sort of approaches and frameworks and tools that we use. They're sort of listed here. I won't go into them because I'm going to try and make up some time here and bring us in. But the notion that some things are more proactive and more investment oriented, and we place money in enterprises or projects or people who we think are doing important things going forward, and others are more exclusionary or screening, where we withhold investment, or we try to slow down certain market forces where we feel either there's negative externalities or there's reasons why things are not happening the way in a global sense they should be. And so all of that was within the umbrella, and there are practitioners in all those spaces that do that sort of stuff. And you should just know within that sort of, there's some terminology, who you're looking for and what sort of stuff is going on with that. So there are actually approaches, and there's actually a little bit of a science to the art of the pretty words. Impact investing runs a spectrum, right? So it's not just one kind of investing. It is all kinds of asset classes. It can be equity, it can be debt, it can be cash, it can be market and above market, it can be below market, it can be free money. It's the investment is agnostic, and I'll run through that little sort of spectrum in a second, but it's helpful. And that investment is simply layered with a social thesis or an environmental thesis that your company or a potential investment opportunity also solves a problem in a tangible way. It could be environmental, as with sort of probably a number of the companies here at LACI. It can also be social and a variety of different things. But sort of to look at the notion of the asset class or the structure, I would say keep open, because there are investors that work across all of them, right? So these sort of blue ones on the right here, we typically put under the moniker of a mission-related investment, or an MRI. That presumes a traditional risk-adjusted rate of return. So that will be a traditional investor who wants to make the same money they would make anywhere else. They are simply adding on a separate screen because they believe that some of these social enterprises or businesses are either mitigating risk by their business model, i.e. Alternative energy isn't a do-gooder thing, it is actually just the best science going forward for this planet, and there's an alpha there, and we want to get involved in that. Or it can be something more mitigating. So I'm trying to mitigate my portfolio of investments, which is heavy on fossil fuels, let's say, with a number of alternative investments, and so they will play. But those blue ones on the right, this is sort of your traditional wealth manager, investment bank, a variety of people who will play across a diversified portfolio of assets and seek a risk-adjusted rate of return. The green on the left is a second bucket of types of investments that typically will bear a little more risk or endure a lower return on their investment because they are more interested in the other side of the equation. They are more interested in the social or environmental impact of what's going on. These are people perhaps who, and it bears a different tax treatment and things that aren't necessarily relevant to this, but at the end of the day, there's another bucket of types of investors who are more interested, frankly, in changing the world than optimizing their investment. And those folks can also be approached. That might be a large institution like a private foundation that has a certain thematic risk or thematic interest, or it could be a municipality that has some sort of strategic economic or social goals. It could be a variety of different things, but there are folks out there as well who do that, and they play in all those asset classes as well. So it could be everything from, I'm just going to take some cash and put it in a deposit in a local credit union because I think this neighborhood needs a local credit union and I want to support them, all the way to a variety of equity and debt instruments and a variety of different asset classes that can be played in. Those program-related investments, if you hear that, or PRIs, typically bear either a higher risk for the return or will take a lower return for the risk, the flip side of that. And those sort of just both exist, and collectively that spectrum is what we call impact investing. Simply put, all of this is getting more popular, so I won't go into it, but at the end of the day, the numbers are substantially rising. It's probably rising for a couple of reasons. One, I think a growing population of the investor base in general is believing that the world is on fire and something needs to happen about that. I think secondarily, there's an intergenerational transfer of wealth going on in America where the investment tendencies perhaps, had I been rich or if I was rich, but like my grandfather is perhaps not the same as mine. And so the interests in what are being invested in potentially are broader and not that pure, I want as much money as I can make, and then maybe I'll throw some charitable donations around here and there and do that. People are trying to integrate their investments with their worldview and their social problems. And then the third, I think he left, but there's just new money being created, particularly here in California. There's people like Chance or other people who have exited from certain things, and at the end of the day, they have money and they have an entrepreneurial spirit and they're kind of hooked on investing, and they don't want to just like buy boring stuff or get invested in boring stuff. They want to try new things and new models, and that's where the excitement is. And so I think all of those people tend to probably at a greater percentage self-select into impact investing in some of these things, whether they use those terminologies or not. So these numbers continue to go up across a variety of folks. I would similarly say that corporate venture and venture capitalists also, there's a lot of people who will strategically invest because it's in their best interest. It could be everything from I'm Kellogg Corporation, I have my VC arm and I need to invest in the granola bar of the future, which may be healthy and may play into some of this, all the way to cities, counties, states who are looking to invest in a policy decision and have decided I can use all these enormous treasury dollars I have to help steer that policy in a more activist way, and that happens as well. It's all, you can Google all around, it's all sorts of folks who do it. It's not just sort of crazy individuals, it's institutions, it's large players, there's a lot out there. Some of it written about interesting and intelligently, some of it written about it fairly glibly, but feel free to educate yourself. And then I would just say there's lots of types of people doing this to think about. I just threw up some logos here, a number of which we work with, but on the right is everything from large banks and investment banks who do it at a very high scale traditional level and things like social impact bonds and very big financings, to a number and a growing number of private foundations who've decided that they can take their endowment, which they have to invest, and steer that more towards their missions, and they are either developing departments for impact investing or retaining impact investment advisors to help them do that. There's municipalities, there's health systems who are trying and have a duty to sort of build in the health of the communities in which they serve, and there's ways you can do that through investment and all that. So I'll leave it at that.
All right. Thank you. So how does this kind of group decide if they should try to go after this type of money?
Because of the spectrum that's out there and that there are, in theory, products and tools for all, I would say not to worry about the financial aspects of it. Think about yourself and the model and the business model you have, and think about thematically, every business presumably is solving some sort of problem if it's going to be profitable. Is the types of problems you're serving more applicable to a larger social problem or a public benefit? And if it is, think about that. Think if there's a compelling narrative within that space, and if so, start thinking about the types of individuals or institutions that have already self-identified as being interested in those types of themes.
Can you give them an example of a company that has gotten some type of social impact investing? Because that's what they're here for.
Okay, I'm going to do this a little generally. You'll just have to accept that sort of as a registered investment advisor, we're SEC regulated, and so there's a variety of private things. But I can give an illustrative sort of idea of what's going on. So one space that I've worked with for a long time, and it's interest to some of those investors and other people out there, is in the healthy foods realm. So there's a couple things going on there. One, I think there's growing science that processed and scienced and engineered foods are not always necessarily the best for ourselves, and then we can see what they're doing to the public health of what's going on. Simultaneously, consumer demand is moving in a way towards fresher and healthier interests, and so that's something that's seen from a market forces point of view. But at the same time, for the most part, those interests are only really, in the moment, the experimentation, the innovation there is really only what I'd call the mass affluent or affluent consumer level. So your Whole Foods crowd can get in full force, but your working class communities and lower income communities can't necessarily do that. And so there's an opportunity there because there is a financial thesis around things that are happening here, and VCs playing at the affluent side a lot, to figure out, are there places lower down on the sort of the pyramid where these types of products and services can get out there to working class and lower income populations. And so that's a sort of, you smash that up and becomes a little bit of an impact investing thesis. Within that space, we've been lucky enough to do a couple of things. We've worked with a consortium of investors to create investment funds, so sort of closed-end, in this case, debt funds, that then were invested in CDFIs, or that were mentioned earlier, so in sort of like a more benevolent lending institution, to then make small business loans to all types of food entrepreneurs who are playing in that space. Could be everything from new product development, perhaps production of food itself, processing, retailing in low-income neighborhoods, all that sort of stuff, and lending there. And there's been a lot of movement by creating a fund and a bit of a structure for that. And then simultaneously, without naming names, I due diligence individual direct investments into some of the more promising models from some of these folks who say, out of that, we've learned about some interesting companies. There are investments that can be made. They're both equity and debt, because we like what they're doing and they need to take it to the next level. And we want to create, maybe it's a below market, maybe it's one of those PRI type investments, because we want to encourage them not to just rush after the highest margin and the juiciest part of the market. We want to continue to encourage them to play in maybe some of the lower margin areas and see how they can refine their model there. And so it can be direct investment, it can be fund creation. That would be in like a healthy foods area, but it could exist in environmental clean tech, in life sciences, in poverty alleviation, a variety of different themes.
Yeah, that's great. So, I mean, what I hear from that is that things that you might not think might be applicable to, this type of investment, if you're creative in the way you're thinking about what problem you're solving, you might be able to couch it in a way that makes sense for these types of investors. I mean, a healthy food company, you'd think, I can't go to an impact investor for that. But, if you really think creatively about what you're doing, you might be able to tailor your offering in a way that makes sense for these types of investors. All right, thank you, Daniel.